Morning, guys. Let's look at Nifty 50 and Bank Nifty trade analysis on 20th. You can see as there was initially a bullish momentum, as 2 days continuously the market is trying to be very bullish and trading about 200 moving average, clearly signifying bullishness. And you can see price took support from this 200 moving average here with a huge bullish candle. And again, the market took here, guys. Here it formed as a support here, where the market initially rallied towards the downside and the price took support from this zone and again continued further bullishness. You can see this kind of momentum where the market is not really bearish, guys. You can see they have fair value gaps, but you can see that even after this aggressive selling, also the price took support from this 200 moving average, and you can see this kind of huge bullish candles clearly signifying some kind of bullishness. But let's look deeper into how you could have easily taken this trade. And you can see clearly the market here broke this low with fair value gaps here. Or you can consider the market clearly broke this low. So in case if you consider this low, guys, this breakout structure over here, clearly market broke the first structure here. This you could have considered the breakout structure. So with this breakout structure, keeping this as order block, keeping this as 1 minute order block, you could have easily entered your position, keeping your stop loss just above that candle, above this candle itself, and entering midway between this and targeting all the way towards. If you try to plot the Fib extinction levels, the common point in this to the common point between this to the common point in this, you could have targeted the 1.68 level or you could have targeted the 2.6 level. You can see how the market clearly came all the way to 2.6 level here. And this is where you could have easily targeted, guys. This is about the first trade where you could have taken because you can see clearly breakout structure with this huge momentum candle with fair value gaps between this. You could expect the price to retrace, and you can see this rejection candle from this zone, guys, clearly signifying bearishness. Or you can see this kind of huge bearish candle here. Or you could have seen rejection from 20-year moving average. You could have entered anywhere along this to confirm that the market is bearish. Or even here also you could have entered after seeing this kind of huge bullish candle. Price couldn't cross the 21 moving average, and you could have traded towards the downside. So if you consider this swing, guys, the common point between this to the common point between this, you can see the market faced rejection from 0.38 level here, clearly signifying bearishness and continuing further towards the downside. So if you consider this swing, guys, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move. You can see clearly the 100% and the 2.36 level are in confluence with each other, clearly showing the momentum towards the downside. And you can see here, whenever you find 200 moving average, guys, you can either the market aggressively breaks this zone or the market might take support this level. But here you can see the price taking support and the market rallied upwards. And this is where the market clearly broke the high, guys. So this is where the market formed a chalk over here. And with this huge momentum, you could have easily plotted the order block here. See, this is the last up candle. And here you can see the market rallied all the way, took support from this candle and formed a huge bullish engulfing pattern over here. Like this huge bullish candle, guys, here it formed another huge bullish engulfing candle. You can see this kind of huge engulfing candle and price taking support from 200 moving average. And this another, the price came, touched the order block level here and formed a bullish engulfing pattern, and it continued further selling towards, buying towards the upside. But here you can see there isn't much momentum. But what you can expect here is that you can see this kind of swing, guys, which actually broke this low. So if you consider this high to this swing low, guys, you can see price facing resistance from the 0.5 as well as the 0.6 level over here. This is the 0.5 as well as the 0.6, and this is the golden zone ratio, which usually price facing some sort of resistance here. Mm, This is a 50 level. So you can see price retraced all the way, but aggressively sold towards the downside. But it broke this low, this low, this low. But what you can see here is that in case if the market sentiment would have been bearish, no, guys, the market would have clearly broke this 200 moving average towards the downside and even broke this low as well. Even this low market would have broke after retracing to these levels. You can see this looks like a last sell-off candle, but again the market took support from this zone, guys, where price actually acted as support. And in case if you plot these levels here, the swing over here, the common point between this to the common point in this, you can see the market broke the 0.5 as well as the 0.6 level. But you can say this kind of aggressive selling, guys, there wasn't much aggressive selling because the market consolidated and price taking support from this 1 minute order block and formed a bullish engulfing pattern. And here you can see this is where a lot of confluence adds up, guys. You can see the market aggressively sold, but here the market again rallied up and price facing rejection from this 200 moving average. Along with this price facing rejection, what you can see is the pattern formation, guys. Usually, whenever you find this kind of pattern, it signifies a lot of confluence, guys. You can see this pattern formation, and the market is trading, heading towards the upside, and it clearly broke this level, guys. The two the breakout structure of this zone. So if you consider this swing momentum, the common point between this to the common point between that, you can see the market retraced all the way to 0.38 level here. You can see this is the 0.38 level where price taking support over here. You can see this kind of huge aggressive selling as even if the market couldn't close above this high, but you can see the market came all the way to this demand zone over here, the last consolidation, and faced rejection candles from here, and market tried to close above the this zone. But here you can see this kind of candle formation here, guys, which broke towards the upside and closed above the 9 as well as 21 moving average as well as the 200 moving average confluence. And if you try to plot the VWAP level over here, you can see if VWAP level finds any confluence. You can see, guys, here the VWAP level is acting as this is the day's VWAP level, which acts as support here. With this confluence, guys, you could have easily entered long position, keeping your stop loss just below this candle itself and targeting all the way towards the upside. So if you try to plot the fib extinction levels from here, guys, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level or the 2.6 level over here. But you can see, guys, the market rallied all the way to 4.6 level here. This is the next day, guys. You can see this is the next day. But what you could have done is you could have targeted all the way as long as the market moving above 21 moving average now, guys. You can see this red line over here, this red color line over here. Once if this candle with this aggressive momentum sold towards the downside, you could have exited your long position. Or in case if you try to plot the fib extinction level, guys, as we have already discussed. So the common point in this to the common point in this to the common point in this, you could have targeted the 2.6 level over here. This is where you could have targeted, guys, 2.6 level over here. So this is where you could have targeted another beautiful trade, or you could have even taken trade at this position itself, guys, keeping your stop loss just below that candle itself. You could have even traded, and you could have held on to your trade as long as the market is trying to move towards the upside. As I've told you, this kind of pattern formation, which actually signifies a lot of momentum. This is the trade where you could have easily taken, guys, the 1, 2, and 3 trade setups where you could have easily taken in Bank Nifty. So let me try to break it, guys. You can see here the market broke this low, guys, and it was big. But here the market again retraced and faced resistance from this order block levels and continued. It moved 2.36 level towards the downside, and towards the upside also the market almost reached the 2.36 levels, or you can consider the midway between 2.36 to 3.36. But it's better you could have exited at this position. And that is about the trade, guys. But if you consider this swing momentum as the low to all the way to this side, you can see price rejecting from 0.38 level over here. This is the 0.38 level where price is rejecting. So you could have even after the price rejecting, after forming this kind of huge bullish candle, you could have even entered long position. But the market faced resistance from the 0.5 as well as the 0.6 level. So if you consider these fib extinction levels, so you can see the market here face resistance at this zone, guys, the 0.5 as well as the 0.6, that the market was not able to head higher. But you can see this kind of momentum, guys, where the market reached all the way to 4.26 level. You can see the market here. You can expect a reversal from here, guys, because you can see this looks like a last sell-off candle of this momentum. So this is on 21st of March. So you can see price taking support from this 200 moving average here. And this kind of huge bullish candle, you could have expected some kind of bullishness and you could have scalped a little bit, guys, to make a decent amount of profit. But let's look at Nifty 50, guys. In Nifty 50, you can see clearly that usually the market sentiment is bullish only, guys. You can see here with this impulsive momentum from 2 days, the market is rallying very bullishly. And what you can see is the market here formed some kind of pattern over here and found a bullish engulfing pattern over here. You can see clearly this is a clear bullish engulfing pattern, and the market is trading above the 9 as well as 21 moving average. So here you can see there is no clear price action, guys, but you can see here the market clearly broke this structure. You can consider this to be a break of structure and a market retraced. So in case if you consider this retracement levels, the common point between this to the common point between this, you can see this is the 550 level where the price took support over here. This is the 550 level. So if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you can see the market didn't reach the 100% move, but here it formed another bearish engulfing pattern. And with this kind of huge aggressive selling, you could have exited your position because this kind of momentum is not what we expected. So you can say the last downward momentum, this is where you could have tried your stop loss. Once if the market closed below this zone, is where you could have exited. But what we can see here is that here it formed is some kind of channel pattern, guys. You can see clearly. So in case if you try to plot the retracement levels of this channel pattern, the common point between this to the common point between this, you could have targeted this swing, guys, the 4.26 level. This is where you could have easily targeted. So you could have made a small scalp. So to this position. So the common point between this, keeping your stop loss just below this candle and targeting all the way to this level. This is where you could have easily scalped. But you can see this kind of aggressive selling where the market even closed below this low and this low which acted as resistance, and the market clearly broke this structure towards the downside, breaking the 9 as well as 20 moving average and continued all the way towards the downside. So if you consider this swing momentum, guys, the high of this candle to the low of this candle, you can see the price here acting as resistance over here. This is the 550 level where the market is acting as resistance. So you can see clearly this kind of swing momentum here, this low which acted as resistance here, and if you consider this whole swing, the 550 level is acting as the resistance. So if you try to plot the fib extinction levels, guys, the common point, the high to this zone to the low to this zone, guys, this is the swing momentum. You can see the market came all the way to 100% move. Here is where the market rallied. This is the 100% move, guys. You can see. So if you try to enter short position, keeping your stop loss just above that candle and targeting all the way to 100% move, this is where you could have easily targeted. So in case if you try to even add VWAP level, you can see here the market acted as support and here the market clearly broke. So this is where you could have scalped, guys, and keeping 200 moving average as the point here. You could have exited because it's very difficult because 20 moving average acts as a lot of confluence. So if you consider this swing momentum, guys, which actually broke this high as well, or you could have entered long position after seeing this kind of huge bullish candle, keeping your stop loss just below that candle. But coming to candlestick psychology later, guys, because candlestick psychology even helps you to even capture these trades, guys. See, you just need to have a small risk to reward ratio. In case you could have considered this 200 moving average as support, so you could have kept your support like this, or you could have just kept your support like this, guys. And whether this kind of candle is going to show some kind of confluence or not is when you could have plotted the fib of this candle, guys. In case if the market is facing rejection from the fib of this huge bullish candle of this Mariposa candle, candlestick formation at certain levels is very important, guys. But you can see is here it formed another bullish engulfing candle, but here it doesn't form any confluence here because you can see initially the market is in a downtrend, and this is you can see here it formed another bullish candle, here it formed another bullish candle of this downtrend, guys. But here as soon as the market reached and exhausted this 100% move, guys, you can see this 200 moving average as well as the huge bullish engulfing candle and the price rejecting from the fib of this huge bullish candle, clearly signifying a lot of bullishness, guys. And the market overall trend is bullish only, so you can see the market is bullish only. You could have entered this position, but I'm not considering this kind of trade, guys. But for better risk to reward ratios, you could have easily taken these trades. But you can see the market here clearly closed above this high, guys, forming a chalk over here. So this is a chalk, clearly closed above this high. And if you consider this swing momentum, guys, the low of this candle to the high of this candle, you can see price rejecting from 0.38 level over here. This is a 0.38 level where it clearly signifies bullishness, guys. Usually price would have retraced to 50 levels, but here you can see this is the 5-minute zone as well as the 0.38 level, as well as the anchor wave levels, as well as the 9 as well as 21 moving average. Here is where the market took support and even closed above this high, guys, forming a break of structure here as well. So you can see the market formed a break of structure. So if you consider this swing momentum, the common point between this to the common point between this, the price took support from 550 levels over here. This is the 550 levels where the price took support, 550 levels where the price took support. So you can consider this swing momentum or you could consider this small swing momentum. But in case if you consider the whole swing, guys, the common point between this to the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, the 1.68 level, or you could have targeted all the way the midpoint between the 1.68 level or the 2.68 level. You could have targeted somewhere here itself, as you can see, or you could have traded as long as the market is trading above the 9 as well as 21 moving average. You can see here the market clearly broke, but following itself, the market reversed and continued very bullish. Or if you try to plot the fib extension levels of this zone, guys. So if you consider this momentum over here, see if you consider the common point between this to the common point between this to the common point between this, you could have targeted this zone also. But here, as the market sentiment is very bullish now, guys, you can expect huge momentums where you can say you could have just taken anywhere along this, you could have been very profitable. But as you're getting now, guys, my risk to reward ratio, you could have entered short position here, guys. Long position of this 50 level support here, keeping your stop loss just below the VWAP level. And you can see clearly the market is trading about 21 moving average, and you could have just hold it on to your trade as long as the market is moving. This is how you could have traded, guys, with very small stop loss is what we have expected. But let's not talk about this. You can see you could have even entered here, which I have already told you, where price took support from 0.38 level as 5 minutes zone and even broke this high. I think you are getting, guys, what I'm saying. And again, the market retraced to 350 levels. So if you try to plot the anchor VWAP level here, guys, the low of this candle, you can see price taking support here, price taking support here when market clearly broke, followed by another reversal, clearly showing some sort of support. Or if you consider this swing momentum, guys, the common point between this the common point between this to the common point in this, you can see the market rejecting from 0.78 levels or the anchor VWAP levels. You can consider this also as support. And you can see how the market rallied upwards, guys. I think there is no point for me to even explain how the momentum was towards the upside, clearly signifying a lot of bullishness. And you can see here with this swing momentum, the market retraced here, guys. But if you consider even this swing momentum, the common point between this to the common point in this, you can see again the market rejecting price from 0.38 level. This is a 0.38 level where price is rejecting from this zone. Or else if you try to plot the anchor VWAP levels of this high, you can see once if this anchor VWAP level, the 9 as well as 21 moving average broke towards the upside, you could have easily entered long position here, keeping your stop loss just below that candle itself and targeting all the way towards the upside. So this swing momentum now, guys. So if you consider this common point in this, to the common point between this, you could have exited at 1.4.3 levels, or if you try to plot the fib extinction levels for this common point, for this common point to this common point, you could have exited. I think you're getting knowledge of this retracement. It came all the way to the 4.26 level. So if you consider this momentum to you're getting knowledge the 1.68 level as well as the 4.23 levels are both in confluence with each other. So you could have exited there, guys. I think that's a hero zero trade where you could have easily entered and made a decent amount of profit. This is my trade analysis, guys. I'm getting like what do you my my purpose here is to make you enter trades with a minimum risk to reward ratio. So what I'm teaching and profit targets, guys, that's very important because if you're not sure, like when you need to take book profits, I think that's very important. Risk to reward ratio as well as profit booking is very important. So I have taught you how you could have entered with a small risk to reward ratio and how you could even have exited your trades with a very good decent amount of profit. So I hope you're getting, guys, my trade analysis of how I usually trade in both Nifty as well as Bank Nifty. So if you find my videos helpful, guys, please like, share, and comment. Stay with your friends and family and keep supporting my channel, guys. So it would be helpful for my YouTube algorithm. And if you have any suggestions or you could have, if you want to keep in contact with me, you can keep comment below. And Instagram is where you could have, you can message me personally. So I have handed over my Instagram over there. So please don't hesitate. You can easily message me and I would love to reply. Thank you guys.